Let's start off with your headline earnings per share. You've increased dramatically. We saw normalized headline earnings up 35%. And when you look at the previous year's performance, even during the crisis, Sanlam seems to have been doing quite well. Tell us about the period that was and how you've actually managed to outperform the rest of the market.
Well, the conditions were tough, but you know, we're trying to focus on what we do best. The South African market has been very good for us, and then the cherry on top is the growth that we got in Africa and India.
Well, let's touch on Africa and India and, of course, the EM markets. We also know that you are operating in the UK. It's a very small business. Tell us about the play between South African markets, the rest of the continent, India, and then what you plan to do with the UK.
Yes, Africa for us is a growth area. You know, not too much competition there, so the margins are higher. We were lucky in that in many of the countries we were first movers, so we well established. We have some of the major clients there, and the business is getting traction there. India, of course, for us is a future part of the business. We're making another investment there to get a bigger chunk of our partners' business. So we are expanding not only from insurance into broader financial services there to get a part of the Indian growth story. For us, it's a big part of the future, what we would like to do and where we would like to be 3 to 5 years from now. On the UK, the market is really tough, and our strategy there is not to compete with the big established players there, but to really focus on a few niche products, and that's been working for us. It's still a small business, but if you really look at the flows in that business, we've been doing very, very well.
Let's touch further into India, and we know that in your previous financial results, 4 billion rand in cash, and you were talking about strategic uses going forward. We've seen some share buybacks. You've got around 3.2 billion rand left. What do you plan to do with the rest of the cash?
Well, of the 3.2 billion, we've earmarked close to 2 billion for India. In fact, we'll be announcing later on today, we'll be announcing the transaction, taking a bigger stake in Sanlam Capital, which is our partner's holding company there. So that will take care of about 2 billion. And then we have 1.2 billion left, firm commitments of around about 400 million around these, mainly distribution initiatives in South Africa, 1 or 2 smaller businesses building, completing our suite of products in the UK, and then about 400 million earmarked for Africa. No real new businesses, but bulking up what we have and growing the business. So overall, that takes care of most of the cash that we have, but the results will produce by itself. If we keep on doing well, we will add to the cash.
It's also fascinating because when you talk within your prospects and forecasts and looking forward, the forward-looking statement, you say that conditions will remain tough. But when you look at your life business, which has increased by 26%, and your fund flows up by 72%, it surely hasn't been tough when you look at this growth. Are you expecting these kind of numbers going forward?
Well, we would like to say that that would be the case. Two things that you have to take into account. We've had a very good second half of last year, so the base is substantially higher. And the conditions have become much more tougher since the first half of the year, and we expect it to continue for the whole of the second half. So we don't really expect to perform at exactly at the same level, but we still think our business model is robust. We will gear towards tough times. We've set the business up, in fact, in 2007 and 2008 to be able to handle the volatility that we see in the markets. And a lot of what we see now is the result of that, and we would like to continue on that route.
Let's take a look at your life business. I alluded to it, 26% increase there. Is this predominantly from Africa and, of course, now that you're also in India, or is this a case of the South African consumer looking far stronger?
No. I think we've done about 10%, 12% from the South African business. We've done much better in the lower end of the South African business. We all know that we've seen pretty strong salary increases, certainly, again, substantially above the inflation rate. And a lot of that we've tapped into, so we've seen growth there. But the African businesses have really performed well, Botswana in particular, in spite of very difficult conditions. People seem to save as they see the future being less rosy, and that helped us quite a bit.
Of course, fund flows as well, up astronomical 72%. What is this attributed to? Is this mostly because of new money that has come to the market? Tell us about this number.
If you look at the gross fund flows, they're 11% up. So a lot of what we've been able to do there is to retain a bigger chunk of the money. So we've had a lot of people save and you get maturities and we pay pensions. So we had the outflows, but we were able to retain, particularly from individual investors, a much bigger amount of the money. So and that works well for us. That has a lot to do with confidence in our investment performance, and also in a strategy in volatile times. We see that when things are difficult, people abandon the sort of smaller boutiques and would rather go for what they perceive as safety. We're not trying to shoot the lights out. We're a constant deliverer of performance. We don't try to be too clever. So in the tough conditions, people sort of, what we believe, return to quality.
Let's also take a look, as you said, India, you're beefing up your presence there. Do you suspect that South Africa is going to play a less of a significant role going forward when it comes to revenue and earnings, and a bigger focus on the rest of the African continent and a particular focus in India?
Yes, I mean, we have to be clear, we're a South African business. We don't plan to go anywhere and, moving out. But the idea is to definitely increase our share in Africa and in India and elsewhere. The South African, particularly in insurance, the business is fairly mature. And we're expecting in the future that we can grow that business by about 10–12% without taking big risks. But certainly in Africa, we would expect to grow 25–30%, and in India even higher than that. So while India, at the moment, it's capital intensive, we have to put money in, and so in the future we really expect that to make a much bigger contribution, say 3–4 years down the line.